Hey YouTube, what's going on? Chris here. Want to bring you guys another little tutorial. You guys gave me the 100 likes on the last tutorial video, so I wanted to bring you another one. You guys really seem to like these, so I want to keep after it. So if you guys could, let's go for that again. Hit those likes, hit the notification bell, all that. I really appreciate it. So guys, what we're going to be studying today is the descending triangle pattern. And the descending triangle pattern is a very powerful pattern, and we saw it in Bitcoin when we broke down from that 6,000 that we were at for probably, what was it guys, 2 or 3 months, where we just kind of moved sideways and up and down just slightly. But we saw the breakout to the downside, and it was a violent break to the downside. I think it took us all the way down to 3,200 or 3,100 at the bottom before we had our reaction. And guys, that's very powerful, and that's a life-changing opportunity if you're able to trade that. So that's part of why we're going to be looking at this descending triangle. Now guys, with the descending triangle, as you can see, we're going down on this chart here, and what you're looking for, you want to see touches inside this descending triangle. You don't want a bunch of white space in here. You want us to be going up and down, and what we're going to be having is lower highs that are going on, and then we're going to have a flat bottom. That is our support. Now what you're going to have after we've had this fall down, what you'll see is big volume. This chart doesn't have volume here guys, but you'll see a large stick of volume. And then when we're making this descending triangle here, the volume's going to get very small, and the volume's going to stay small and low, and then you're going to see a big candle come in on large volume, and we're either going to get pushed to the downside or we're going to get pushed to the upside. More likely than not guys, we're going to get pushed to the downside, and I'm going to give you the facts and figures on that as well, like how often it breaks to the upside, how often to the downside. We're going to be reading out of my book here, and this book is Chart Patterns by Thomas N. Bulkowski. So this is great guys, but I mean, you can see massive drops in a descending triangle or moves to the upside, so we want to pay attention. So guys, it says right here is why we're trying to look for descending triangles. So it says look for two price trends. The valleys align horizontally or nearly so, and the peaks slope downward. Both trends should follow trend lines connecting them. Next point guys, prices must touch each trend line at least twice. And you see how we had this one touch here, we went down here, here's another touch, so we had two that qualified for the top one, and then we had more than two here, so that would qualify for this descending triangle. Prices must cross the pattern from side to side, filling the pattern with price movement, not white space. And it says do not cut off a rounding term and call it a descending triangle. So that's very important to remember, that we can't just have a bunch of white space here where we had just little moves here where we went up and down and we didn't really fight in here and have that chop, that consolidation. Next one guys, it says price usually breaks out downward, but we want to stay on the bullish side, so trade only upward breakouts. A breakout occurs when price closes above the downsloping trend line. So a breakout to the upside would be a close above this trend line right here. Now to the downside, it's this close below this support line right there. And then on the descending triangle guys, another key feature of it, it says volume slopes downward 83% of the time and can become quite low on the days before the breakout. And because the volume's so low, whenever one of those whales come in, those market makers, they're going to push it in the direction that they want to push it in. And guys, it says because descending triangles break out downward 64% of the time, always wait for the upward breakout. If you are lucky, prices will break out downward, spin around, and then soar out the top. And it shows a chart pattern that's doing this in my book guys. So this can be a bullish pattern as well, you know, about 30-40% of the time it can make a move to the upside. So you want to be aware of that guys, that these things can break to the upside, but the way of the trend, just like in this chart pattern here, is down. So a lot of the times this pattern would follow the way of the trend, and the way of the trend was down, so most likely you're going to have this break to the downside, and that's what guys were betting on. They got this close here on this long day candle, and then we got pushed to the downside. So remember guys, more so than not, it will break to the downside. It can break to the upside. It can break to the upside, come back, test this trend line, and then make a further move. It can come up, come back, inside this trend line, close back inside this trend line, and we can break through the bottom. That's a scenario. Here we could go down, guys. We could come back up and test it and then drop back down. We could come back up, get inside this, consolidate more inside this triangle, and then make a further attempt at the top. So you need to be prepared for everything. You need to be prepared for the bullish case, you need to be prepared for the bearish case, and you need to be prepared for sideways movement as well, because we're going to get to the apex at some point of this triangle, and then we're going to have our break. So if you can anticipate these things and you can pick out these patterns, they can be greatly beneficial to you in your trading, guys. These can be basically what you want to do in terms of a downside move. The downside move would be about as large as this is here. You would just take that and put it down here, and that's your target. And same to the upside. And you see the target here is based on this right in here, the measurement of that. So these are things I want you guys to continue to look at, continue to study. Now, guys, we just went through just a little bit of descending triangles. Now I want you guys to really dig into it and do your own research and go through chart patterns and back test stuff and try to figure this out and see if you see some of the things that I'm seeing, and then you can back test how often they break up, how often they break down. And guys, you'll really get a good sense of this, and that's why I bring this stuff to you, because when you're teaching this and helping others learn this, you're going to learn it so much more yourself, and it's a method of helping me study as well, because when I'm going through this and reading this stuff to you and talking about it, I'm learning more about it as well. So it's going to be very beneficial to us in the future, guys, and I think we just have to continue to grind. We have to continue to work hard and just study, guys. Really put in the time. And even if it's 10-15 minutes, put in that time, because it's going to add up. And the best thing I think really you could do is, okay guys, say today I only have 10 or 15 minutes or 20 minutes to study. I'm going to take a descending triangle and I'm going to study everything about it for 20 minutes. And then the next day, a symmetrical triangle for 20 minutes. And before you know it, you're going to have a good understanding of a lot of these patterns. Yeah, you may not be a master at it because you haven't spent, you know, a month and a half studying just about a hammer candle, because there's that much information out there. You know, think of a hammer candle on different time frames, how long the wick is, the body. I mean, there's just so much you can study about this. The placing of it, is it on support? You know, there's so much that you can get into and so much that you can learn. That, I mean, you look at just an indicator like the RSI or the MACD, you could spend a year studying techniques on the relative strength index. But it's whether people want to put in the time or not. I know everybody wants to be a moon boy and say, hey, we're just going up, but it's great to learn these type of patterns, because it doesn't matter if the price is going down or if the price is going up, as long as there's volatility. So God bless each and every one of you. Take care, guys. Leave me down in the comments if you guys have ever done anything with the descending triangle, what you think about it, what's your research on it, and I'd love to hear from you. God bless you all.